And good evening. This is the Elliott Wave update for the NASDAQ 100 for Sunday, December 5th, 2021. As the markets begin the Globex session on Sunday evening, they are moving higher. And that should not be surprising after the basic sell-off that we had on Friday. There should be some recovery, plus Friday's expiration now being on the books. And so traders begin to react into how they came out of that expiration. So thus far, we have the S&P is up 1775, the Dow is up 179, and the NASDAQ is up 21. So let's just jump in here on the NASDAQ as to what took place on Friday and where we are now. Just to do a quick review, off of the all-time highs up here at 16,767, we are in the process of tracing out a 5-wave decline on the minor degree level to kick off this larger corrective phase that I have been anticipating. So within this minor degree decline, we have -1 and -2 complete, and still are within the minor third wave. Minor 3 will consist of 5 waves of minute degree. And within that, we have minute 1, minute 2, and minute 3, which completed on Friday at the 15,538 low, which was just within that last hour. So what this now suggests is that the NASDAQ will be moving higher in a fourth wave, a minute fourth wave correction. So our Fibonacci retracements show us that the initial resistance is going to be at 15,742, 743, and we are basically right there now, knocking on the door and pushing. And I should say of note that the NASDAQ opened up in these areas and then turned around and slid very quickly to 15,680, and now is turning around again. So interesting already in that somebody did come in and just had to sell, and they did, and they hit bids. So what I think is what we got going on is, again, just a lot of position squaring ahead of tomorrow's opening and the balance of the week. So break there, I would expect, because the most common retracement level for a fourth wave would be 0.382. And that comes in at 15,875, I'm going to call it. Now, what's in the way? Well, first, that resistance at 743. Then we have the 20 moving average at 15,800. Then we have that 382 resistance, Fibonacci resistance at 875. And then right above that, we have the 50-day moving average at 15,921. So we've got a fair amount of resistance, and I would think that Fibonacci resistance can be very strong, but more stronger are going to be these moving averages, and particularly the 20 and the 50. A break above the 50 would suggest that we could be going through something different and not necessarily a fourth wave. And so we may be working on a much different count, as I had suggested last week, but so far, I still don't have strong enough support to make any changes to the count as it stands. So, but bear in mind, as I said before, this could be just a series of A, B, C, X, A, B, C. Then now putting in another X wave, possibly, and we have to wait and see. But I don't feel very strongly towards that as much as I do with the S&P. And so what can we expect for tomorrow? I do believe that we will continue to possibly rally overnight. I don't know. There's still a lot of negativity floating around. Again, we're seeing the cryptocurrencies getting hit. The dollar continues to tack onto its current rally. We have gold kind of being unchanged. So basically, we're just getting a bounce off of the heavier selling that we saw in the NASDAQ and the Russell and the S&P for that matter on Friday. And so once we get the Asian markets in, and then we get the European markets in, and then we start factoring in what's happening across Europe, with this latest variant and all of the things that are going on, plus, 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 I think that it'll just be a fourth wave and that we're going to end up and we are going to come back down. So I think that what we should look for tomorrow is this fourth wave will come as a three-wave structure. So an A up, B down, C up type of a structure. So we may still just be in the A wave. And the A wave could take us to here. We get a B wave come back down and an A wave back up. So we still have to wait to see what this whole structure is going to look like. It could end up being an A, B, C flat. So in other words, wherever this A tops out, it drops back down to Friday's lows and then bounces back up to wherever this high is right now before we then start the next leg down, which will be the minute fifth wave decline. Now that's the one. So I still feel very strongly that the market will reach the zone that I have been discussing since the start of this third wave down, minor third wave. And that is the 1.618 level, where wave three will equal 1.618 or 162% of minor one. And that is at 15,375. We have continued support just underneath that at about 15,318, 320, and then ultimate down here at 15,125. So we have a lot of additional support coming off, but it starts to space out a little bit. And right now I am thinking that the 1.618, 162%, that's pretty common for a third wave when it's coming to a first wave. So above or below a little bit, but I think that's where this minor third wave is likely to complete. So wherever this fourth tops out, then we still have right now, it's looking like it's going to be a 400 point decline. The higher it goes, the bigger the decline. So if we're at 15,375, and now we're trading at 745, well, we all can do that math. And so I would think that we could get another serious head lower. And then once it does get down and finish this minor third wave, then we have a minor fourth wave bounce. And it should be a little bit more sustainable and continue to show very strong volatility as these markets just gyrate up and down. But for tomorrow, I am going to look for continuation of this fourth wave. So hopefully by the morning, there'll be a little bit more structure to it. So I'll be able to determine what a B wave and the C wave will look like. And I can likely add some additional levels. Downside, if this all like tops out and then the European trading or even during Asian trading, it really starts to move lower. It seriously cannot break 15,538. That was Friday's low. If it breaks Friday's low, then this fourth wave is done and the fifth wave is underway. And then we're looking for those much lower levels. Again, it should drop in a five-wave structure off of wherever this high comes in on this fourth wave. It should drop in a five-wave structure down to these areas. So if it gets down here and we can count from wherever it ended, 5 waves down, well, then I am going to be very supportive of this minute fifth wave being done and minor 3 being done. And then we get a decent rally back. So for now, I'm looking for continued upside, get this fourth wave complete, and then a resumption of the next decline. And that's going to be it for today. Continue to trade smart, trade using the moving averages, using the Fibonacci, using the Elliott, and trade the price action. Price action is going to tell you exactly what's going on, of course. And using the moving averages for entry and exits is also very supportive of good trading. It helps to keep us in line. And remember, when all the moving averages are in alignment, so in other words, when they're all pointing down, then it could be very disastrous. In fact, I want to take one of these out, and that's going to be this one, so that I can show this a little cleaner. There we go. Now we just have the downside. So if we see all the moving averages are right now, still, basically, we got the 4 pump, turning up higher a little bit. But the 20 flat, the 50 kind of pointing down, the 200 pointing down. So things are still looking a little bit on the serious side here for the NASDAQ. And it's going to take a whole lot more than a 200-point rally in the Dow and a 22-point rally in the NASDAQ to begin to turn these moving averages more than the 4 it's doing right there. So trade smart. The next update will be Monday, the 6th of December.